Hi, this is James Zane with Old Capital, and we've got Ryan and Clayton with Valorem Tax
Yes, nailed
Advisors.
it.
Okay,
Valorem.
Valorem. I'm working on that. All right, so
Yeah.
you guys will be at the conference here in about 30 days at the Old Capital Conference. We appreciate you guys sponsoring this year. So let's just get right into it. I'll throw it over to you, Ryan. Give us your background, and then we'll go to Clayton, and then get into what you guys are seeing on the property tax side right now.
Yeah, absolutely. Thanks for having us. Glad you got to work on your Latin a little bit today, James. But yeah, the firm is Valorem Tax Advisors that Clayton and I started just here about a year ago. My background is I've been a multifamily owner operator for the last 15 years, uh, primarily focused on workforce value add deals in DFW and throughout other parts of Texas, East Texas, San Antonio, Austin. And in that time, I've done about 35 deals, a little over 6,000 units, over 500 million in total capitalization. So, I've always wanted to own apartments and operate apartments. It's been a little hard the last few years, but I feel like we're coming into some good opportunities. But I did not have aspirations of being in the property tax consulting business.
Nobody
However,
does.
nobody does. Nobody should, maybe.
Yeah.
Uh, However, Clayton was my consultant for the last 8 years, so I really got to know him on a business level and his expertise on a personal level. More importantly, he's a very high integrity guy and someone who I was excited to start this firm with. Um, but Clayton, why don't you give your background?
Yes. So I've been in the property tax industry my entire career. Started back in 2015 at the Dallas Central Appraisal District. I was there 3 years, became a senior appraiser, appraising most of Uptown all the way up to 635, and decided to jump over to what they call the dark side, taxpayer representation. So became a property tax consultant in 2015, or excuse me, 2018, and was at one of the larger local consulting firms, managed over $8.5 billion property value, 650 properties, all within the state of Texas. And about a year ago, I decided to hit the reset button with Ryan and try to disrupt the property tax industry.
So,
Yeah,
okay, so
and just
before,
I always have to.
okay,
Sorry to
go
interrupt you,
ahead, Ryan.
James.
Yeah.
Clayton is incredibly humble, so I have to jump in every once in a while. But he was actually the top producer at the firm that he was at prior to us starting Valorem Tax Advisors.
Okay, so I'm gonna go over to Clayton and
Mhm.
start there. Um, so pull back the curtain and explain. So you guys focus in on multifamily and
Correct.
then in Texas. So tell us the typical process. Usually um, the taxpayer gets
Hmm.
their bill, let's say in May of
Hmm.
the assessed
Hmm.
value. But what happens before that? Let's go. Let's start there. Let's just
Yeah,
start.
yeah,
Yeah,
yeah.
yeah.
Like,
From your
so what
role as a
happens?
senior appraiser,
Yes.
2017.
Yes.
Tell us the
Back in
process
the
here.
glory
Yeah.
days. Yeah. So after we'll rewind it even more, just let's just go prior year.
Okay.
After all of the owners submit their evidence for the appeal, I&E, rent rolls, closing statements, lease information, property condition, all of the information that was presented there in the ARB. And actually, Dallas does a really good job of this. In most districts, they have a standard form of documentation that you have to submit with an appeal if you want an informal discussion. And so most people abide by that. And so all that information is gathered and then processed right after ARB. So as soon as ARB is done, while consultants are filing lawsuits and transitioning into that phase, the appraisers are processing every single I&E and rent roll. And
So
here,
give us the time. Like, what month is this?
this is like September, October timeframe.
So
It's
right
like right
now,
now, yeah, they're
they're
processing. Yeah.
processing. Okay, so owners have submitted income statements,
Yep.
engineering reports, all the property
Yep.
condition stuff. So they're submitting it now. Okay, all right,
Yep.
keep going.
Yep, exactly. And so I've talked to them recently, and they have changed that process up a little bit. When I was there, every single property we process that.
Hmm.
And now I think it's more of a macro view,
Sure.
is where they're processing just like rent rates, high level expense ratios, and then they're going through deed records and making sure that they had, what closing statements they have, they're processing that, and then trying to kind of back into a cap rate through their models.
So have people submitted closing statements to them?
Tons.
Okay, so they only
Yes,
have the ones that have been submitted.
correct.
Okay, all right, keep
Correct.
going.
And so the other data that they're going to be using during this time is, they'll look at all the publications, CoStar and other internet publications that they can use, but a lot of them are really transitioning into using TREP
Hmm.
and using refi appraisals because there's not as many sales as the district is used to having. And so some of those sales, a lot of them are distressed. And
Hmm.
so it's hard for them to really quantify what was going on and how to use that information practically into their models. And so they're relying on refi appraisals, which is not the best source of
Is that a
information.
willing buyer and seller
It's
of a
not.
refi?
So,
Right.
and
Okay.
we've had some conversations this past year about that usage and deriving their cap rates based on those refi appraisals.
Pause right there. Ryan, have you seen refi appraisals come in higher than market value in your experience as an owner?
Yes.
Yes. Okay, that's
Yes.
it. All right. We'll keep
Substantially.
going.
Yeah.
Yeah.
All right, back to Clayton. Back to
Yes.
Clayton.
So that's kind of what's going on now. It's a
Yeah.
crutch into trying to get to a time in the market that they can actually use, real sales, because right now there's just not as many as they're used
Not as
to.
many,
And
sure.
some of them are much lower than where
Hmm.
they're at. They're trying to understand why that is, and some of them are higher than where they're at, just depending on class and location.
Okay, so let's say or let's say Ryan finds a deal
Yeah.
and he buys it essentially, let's say at the loan balance,
Okay.
right?
Yep.
And let's say the loan balance is 20 million, but
Mm-hmm.
and Ryan buys it for 20 million. But then the assessed value is like way higher,
Wait. Mm-hmm.
30 million, whatever,
Yep.
right? And now Ryan's like, I don't want to pay taxes on 30. So
Yeah. I want to pay on what I paid for.
he
I don't
submits
want to
the
pay
settlement.
taxes on 20.
He don't want to pay taxes on 20. But in order to fight it,
Yep.
he's like, look, you gave maybe they come down to 27 or 28.
Yep.
And Ryan's like, look, here's the settlement statement, essentially.
Yep.
Right? So now they've got to use 20, right? Like essentially.
They don't have to. It has to fit into their box that it was exposed to the market at a reasonable time. There's
So
a
it has
willing
to have
buyer, willing
marketing.
seller.
Okay.
Yeah, so it has to be exposed. It doesn't necessarily have to be fully exposed. I mean, you can have whisper, right?
Yeah. Yeah. Yeah.
Off-market deals, all qualify for market. In those scenarios, it's how far off it is from their models, right?
Okay.
If the value is half of the value they have on the roll, they're going to be asking those questions. Was this marketed? Who was involved in this? Was it a distressed sale? Was this an auction? Was this a foreclosure? And if it is a foreclosure and it's significantly lower than what they think is market, then there's going to be some pushback there. And so it's not going to automatically go down to that. But in this scenario, what's great
Right.
about the Texas property tax system is that Ryan has the option to file litigation.
Mm.
So once you go through that first appeal phase and say you cut the difference in half and you're almost there, you're at 25, ready,
25, sure.
trying to get to 20, then you move that into the litigation phase, and then that you should typically clean up the rest there. But it might be a longer road to get to where you want to be, given the condition of the sale.
Okay. And
Yeah, there's so much more, I think and I've been doing this a long time, and other operators, feel this way as well. But we just assume that, you buy it for 20, it should be 20. There's so much more nuance and inside baseball that us as owners don't understand. And obviously, me being in this business now, I do, but it cannot go without saying how much strategy and different ways of approaching the appraisal district and coming with an argument that is essential to getting the most savings possible. And that's what Clayton and our team are absolutely the best at doing.
Yeah. In the past, we used to just be able to hand closing statements over if that's the value that we were going for, right? And it would be really no question that, okay, that's the number, we'll just move on. But now on purchase prices that are significantly lower, I usually reach out to the broker. get the full rundown, try to get the OM, figure out if they did a VOV on it, and try to compile that all together so that I could hand it to the district so they feel more comfortable going down, taking such a large reduction. So every
So
scenario is different, but
yeah, so where I was going with that is there's two, give me the two I'm not gonna say excuses.
oh,
What's the
appeals.
two ways of challenging
Yes, yes,
the
yes. So you have
value
markets and then
market,
unequal.
yeah, and
Yes,
an
and equal and
an
uniform, but unequal
equal and
appeal.
uniform,
Yep.
right? So where I'm going with that is if Ryan gets a deal at 20 million and
Hmm.
then they eventually, through litigation, they drop his to 20 million and that's a class B deal in Carrollton.
Yep.
And now every single person
Yes. It's a domino effect.
is gonna say, well, his deal's at 125 a door.
Yep.
I've got my deal's worse condition than
Yes.
his.
Yes.
Like, how can you assess me for 150 a door? Like, it just doesn't. Okay, so
That's why it's always a moving target.
okay.
Every time a property is settled, it shifts the whole analysis just slightly. The tax code does mention that it has to be a reasonable number of comps
Hmm,
to
okay.
create an equal and uniform argument. However, um, what you do in that scenario is you highlight the ones that have been settled, the
Hmm.
ones that have been unsettled, and you have two different approaches, and you kind of merge those two together to kind of explain to the district, here's the direction of where
It's
the
going.
assessed values are being settled. So there's different ways to do that, but absolutely, if you have your next door neighbor settled, and they're getting 10% higher rents, then I should be at least that, 90% of that value.
So walk me through. I know you guys have been doing this. I know Clayton, you've been doing this for a while, but Valorem has been doing this for the last year or so.
Yeah.
Talk me through, maybe pick one or two case studies of, what the client came to you with and sort of what you guys were able to do
Yeah.
for that person.
Yeah, yeah, yeah. So I'll talk one about in San Antonio. San
Yep.
Antonio, from my perspective, is falling apart a little bit. Maybe worse than some of the other markets. Um, we had an owner come to us that was pretty livid on where a property was settled in litigation. And he was asking for my opinion where it should be settled. And so I tried to hold his hand a little bit during that process, trying to explain, this is where these things need to be settled. And it ultimately didn't get done at that number. So he gave us the business for the 2025 appeal. The property had pretty significant issues. It was under risk of foreclosure, and he told us what the loan balance was. And so went in to the district really early on this. And usually we like to wait,
Mm,
longer, let things settle, let the appraisers get frustrated. There's a whole strategy to that. But in this case, it was really important to get it done quickly, especially since it was at risk of foreclosure. And we were able to get it reduced below the loan balance that was on the property.
okay.
And it's really a combination of being able, so the district, they want to help. Some CAB members want to help you. You just have
Yeah.
to find those members who want to
Find the
help.
right person.
Find the
Yeah,
right
yeah.
person. And also, you want to make sure when you do find the right person to give them enough evidence to
Mm,
justify a decision so their supervisor doesn't come back and say, why did you do this?
yeah.
And so just coming and approaching to the client, getting as much information possible, contacting the lender, getting as much data as we can from them, and having property managers go take pictures, go get estimates on all of the issues. Because the owners tell me, oh, we need a new roof, we need a new parking lot, we need to restripe it, the landscaping. It's like, great. We need to get estimates on those, professional estimates dated within a reasonable time frame, so the district can look at them and actually use those in the appeals. So trying to over quantify your issue, make the district feel comfortable about it, and get a good settlement out of it.
So are these pictures like the opposite of what's in the OM? Like
Absolutely.
like like the OM is like glossy, everything is
Yes, you want
perfect.
to get the meanest
Yeah.
inspector to go take these photos, right?
Oh
That's what you're
gosh.
looking for, all the bad.
And
Yeah, so you have to
then
switch the mindset of the owner a little bit.
okay, so
Yeah.
maybe give us like the 1 minute So you get noticed in May. You
Yep,
file the appeal. Then if that doesn't work or they come down a little bit, you think there's a little bit more room, you do litigation.
correct.
And then, so when should people reach out to you guys? And is your process different than other tax consultants? Like maybe walk people through when they should reach out to you guys, and then how your process is,
Yeah, so the best time to reach out to us is anytime before the appeal deadline,
which is when?
which
What is that?
is
Usually
May
like
15th.
June, May
Yeah, May
15th. Okay.
15th. Yeah, May
Okay.
15th is the deadline.
Okay.
And that can vary property to property, but before that, and then after the ARB. So pretty much the time between the appeal of May 15th and let's call it July,
Okay.
that's the bread and butter, the appeal during that time. Difficult for us to take over. We certainly can. But outside of those times throughout the entire year is great for us to get involved. We can get involved in different capacities. Right after ARB, not satisfied with your result and you're tired of going through the same cycle, um, we can take over that appeal and take it through litigation. So we can go ahead and file the litigation and take over that for the remainder of the year. And also, if you already have filed an appeal and communication with the consultant's not going well, you're not happy with the direction it's going in, we can absolutely step in that environment and take over those litigations um, if need be. And then anytime leading up to the appeal. I know a lot of people like to reach out to us right as those notice values come out, which is great. But I would like to have a little more runway when we can work off a short runway. We can levitate and take off. But if we can have some more runway, between January and the appeal, it gives us time to go get those estimates, to go get BOVs from brokers, to investigate, more of the condition of the property, break down the financials to really create that narrative that we need to have is even better. So more time during the off season is the best.
Yeah, and there's not a bad time to reach out to us, of course. One of the things that we've really found is, everyone has a property tax consultant, of course. It is, appealing your taxes every year is just what, owning multifamily in Texas, it's just, standard operating procedure. The thing that we found in a lot of the clients that we've been able to get, and we our first year we're over 115 communities, is that people like their consultants. They've been using them for years, and that's great. And a lot of the times the consultants are great, and there's nothing there. However, a lot of times the consultants, and as time goes on, there's a level of complacency that does set in, and maybe they're not giving the amount of attention to the properties that really are necessary. So we like to come in and say, hey, let us take a look at your portfolio. Let us see how these properties are, the values that you're getting, and make sure that they're good values. And hey, if your consultant's doing great, then no problem. But we at least keep the consultants accountable for how they're providing their service and the level of attention that they're giving.
So
So
you
we'll
can
do
pretend,
full port.
yeah.
We do full portfolio reviews. We have a full team that we really get into the weeds, and we show all the data and analysis. And it's just a great resource that costs nothing to owners out there that want to make sure that their consultants are doing good work.
So you can potentially just, like, let's say it's September, October timeframe. My number doesn't come out till May of next year,
Mhm.
but maybe review the portfolio of the current owner and say, look, we could have maybe gotten this from 25 down to 20
Mhm.
because of these comps. Did your
Mhm.
guy use that, or did he think about that, or what was the process? And
Yeah,
so maybe show people what they might be missing on a couple of these on
yeah.
these couple of these properties. Okay.
Exactly. And it's it's all very quantifiable. I
Yeah.
mean, we go through it's a lot of work, but it's worth it to show that, hey, here are the, here's the equal and uniform. This is what the value probably should have been, and here's all the data to support that.
Is there anything that you see owners do that I'm trying to think of the right word, like they like shoot themselves in the foot in property tax?
Uh,
Like, is
Not
there any
not not using
errors?
yeah,
yeah.
Yeah.
not using Valorem tax advisors.
Straightforward.
So
I'm
we
just
can
saying
start there.
you meet with somebody and they're like, "Hey, this is how I've been doing it." And
Yeah.
you're just like it's like when somebody comes to me and they're like, "Yeah, I've been paying, 2 or 3% more." And I'm like, "There's another product that, you could save $100,000 a year on interest just by change. It's like the exact
Changing
same
one
thing.
small
Yeah,
thing.
changing one thing."
It,
So, yeah.
it really just comes down to, giving full, not keeping their consultants accountable, and not really, and even sophisticated guys who have been doing this for a long time, you know, you you really have to get into the analysis to make sure that your properties are getting the appropriate savings.
Hmm.
So it's, you know, it's just a lack of, a full trust in the consultant. And like I said, sometimes the consultants are great. I mean, there are, it's a competitive business, of course, and there's a lot of good ones, but there's also a lot of bad ones,
So let me
or
ask
ones
one.
that were doing well and just have fallen off for whatever reason because of complacency.
So let me ask a couple questions. These would be a little bit more direct, and you can have a short or long answer to them. So a lot of times when we're underwriting a property, the person's like, "Hey, I'm in litigation
Yeah.
for my 2024
Yep. Yep.
number,
Yep.
and I'm still waiting to settle that."
Hmm.
Um, is that like a strategy, or should like, because
Yeah.
I'm like, look,
Yep.
you're trying to refi this
Yeah.
deal.
So you need to, yeah.
Yeah, I'm like, or even the 2025, right? Like
Yeah.
2025, a big number came out. They got it a little bit lower. Now they're
Yep.
in litigation, and it's just like
It's
the
just
lender
in
is just going to
limbo,
underwrite the higher
whatever's,
number.
yeah, for sure.
So,
There's a balance. There's a
yeah,
balance to it. And some of the balance you might not have control over. But so in Dallas, which is really where this plays into a larger effect, because Tarrant County is typically quicker and they can get
gotcha.
done before
Okay.
the next ARB. But a lot of the courts are actually not adding continuances, and that was a strategy. Get your first court date, and then if you look at your analysis and your neighbors haven't settled, and you're
You just
the
keep asking for,
you just
yeah.
keep asking, you keep pushing it down the line.
Okay.
That was a strategy, a few years ago, but now the courts are getting so overwhelmed. Really, it happened after COVID. Courts got
Yeah.
overwhelmed. Property tax just kept adding to that pot. And now the courts are saying we're not doing any continuances. And actually, matter of fact, if you have a property tax case, we're going to move you to the front of the line so we can clear our docket.
Yeah, move it up. Yeah, yeah,
Yes,
yeah.
move it up. And so that's kind of what we're seeing. And so, if it's kind of the luck of the draw, whether you get a later hearing date or an early hearing date, and you just have to manage that when that comes up. And like you said, it is a balance when there's a refi or a pending acquisition having to happen, that you might have to take off a little bit, from your best case scenario to settle a little bit earlier, because that number on the NOI is obviously exponential for the tax savings. So you just kind of have to have a balancing act.
Okay. Here, I got two last questions to round us out here today. One is, and you can answer this however you guys want. I know
Okay.
sometimes it changes, but how much do you guys charge for someone to use you guys? Because I seem to get different answers from different people
Yeah.
on the whole tax thing. So,
So we are a contingency, so performance
okay.
based, percent of the tax savings capped at a reasonable number.
Okay.
And it varies between complexity, location,
How many
portfolio
properties?
size,
Yeah.
but yeah, it's 100%. If we don't save you money, we don't bill.
Okay.
So it keeps everyone completely motivated to reach those goals.
Okay.
Yeah, and
And
we're
yeah.
obviously very competitive.
Okay.
Yeah.
And then what's the best way? Like if, I've got 2 or 3 properties, is there size limit or minimum or okay, so
We like to say above 4 units
yeah,
because
above 4 units for sure.
yeah,
Yeah,
above
yeah.
four
Commercial
units.
stuff. Yeah, yeah.
Yeah,
Multi, yeah.
commercial stuff,
Okay.
exactly. But yeah, we'll take anything that's multifamily dwelling.
Okay. And then what is the best way if people want to do the portfolio analysis, or if they're coming up here, they want to get ready for 2026 and sort of, or even have some stuff from 2025? What's
Yeah,
the best way for people to reach out to you guys?
you can contact either of us. You can contact me directly. My email is Clayton at valoremtx.com.
Okay.
And then my direct line cell phone, you can text me 214-970-9339.
All right. Ryan, any final comments here before we wrap up?
Not really. No, we're just actually yes. One of the things we're working on One of the things we're working on and we're super excited about, and we've already got it going for Dallas County, and we're going to have the other counties in the Metroplex as well as the other major metros in Texas. Is we have paid a substantial amount of money to get proprietary technology to ID properties that are overassessed,
Hmm.
and it actually runs a full analysis, equal and uniform analysis, and we have we've any property that you have in Dallas County, we can immediately see like are you overassessed? Are you about at the median, or did your consultant do really well and you're below? But that's something we're super excited about, and once we are able to get all of the counties in the state, it's going to be a really great asset
Powerful.
for us.
All right. Well, I appreciate you guys coming on. We'll see you in about a month at the Old Capital Conference and talk to you guys then.
Thanks,
You got
James.
it. Thanks,
See ya.
James.
See you guys.
Bye.